Welcome to the last in this year's series of webinars. My name is Jeff Tucker, CEO of Tucker Company Worldwide, based here in Haddonfield, New Jersey. But I think most of you guys know we're the oldest privately held freight broker in the U.S. Been around now, entering our 63rd year. I'm third generation CEO. Been in the business now 32 years. Been running it or owning it for a little over 20 now. So we're a freight brokerage and a freight forwarder, and spent a lot of time in the industry, in different trade associations, and wanted to share, our perspective. We've seen a lot, and I kind of I'm grateful to see 2023 soon in my rear view mirror. I know that I will have lost a few years of life at the end after having gone through this. My least one of my lesser favorite, let's say, news sources, would often refer to 2023 as a bloodbath year for the freight industry, and for many it was certainly that's a sensational word phrase, but it was a heck of a hangover, so to speak, from the boom that occurred at end of 2020 and into 21 and to about half of 2022. So let's just get into it. I was a history major, economics minor before I got my MBA, and so history to me and economics are one and the same. You have to really understand your history to build success, and the history of this industry is pretty clear, and the patterns are pretty clear. No surprise, right? The pandemic completely upended the entire global supply chain. We're forever changed by that experience, but inflation and the gift of time led to a calming of the supply chain, and we've got some data to show you exactly what that looked like from a stress to the world supply chain, global supply chain. And we'll talk about what's occurred and what might be next for us, and then lastly, what can we do now? Again, this is primarily if you're involved in buying, purchase, transportation, and we say if you can read the tea leaves. I think the tea leaves, after 32 years of buying and selling and dealing with thousands and thousands of carriers and hundreds of customers, and kind of feeling the marketplace, I think the tea leaves are screaming at us right now. So we always start here with the Morgan Stanley Dry Van Truckload Index. I won't spend a lot of time going through this, but the red line with the squares is where we are today. The black line with the triangles is the average of 2012 to 2022. Now, you'll see that we're just below the average right now, meaning we're sort of at the average, right? Just below, but recognize too, when we talk about it just being just below, recognize that we had, in those 10 years of the average, we had 3 of the worst capacity crises in history. So obviously pulling the average up quite a bit. So I think if we think about it that way, we'll think to ourselves, we're pretty average right now. It's not normal. There's no such thing as normal. Look at those crazy peaks and valleys in that. That's normal. Chaos, a little bit of chaos is normal, but average is where we are. We're just below. This here is new for us. This is a lot of different sources: Bureau of Labor Statistics, Harvard Peterson Global, Baltic, IHS Markit. A lot of really great sources kind of put this thing together. Global Supply Chain Pressure Index. So it's a measure of the stress to the global supply chain. And you can see there, that's that same roughly 12-year period from September of 2010 to today. And you can see, let's just see, I don't know if you can see my cursor. No, my cursor is not showing, but let's just take a look at 2018. 2018 was, before the pandemic, the worst capacity crisis in history, bar none. And you can see the stress that the global supply chain was under during that period of time. 2019, as we all know, 2019 was pretty slow. Began, feeling like a lot like 2023 did. But then you see the pandemic and the huge, huge impact. I mean, nothing like that. This thing goes way back before 2010. I just didn't, want to crowd the screen, but nothing like this. But folks, look at where we are today. We took a nosedive, just like we know we took a nosedive, and we got normal or average. Again, normal is a little bit of chaos. We got average, but look at that trajectory. That, my friends, are the tea leaves telling us, hey, we're back to normal, but look at that. We just broke through, and who knows, right, where this is going. I think there's a lot of data that would point to an overreaction in the market. So real quick, reshoring. We hear a lot about reshoring. Reshoring, this is from Stifel. Stifel is a great source of information. We go to the Stifel conference every year, and we love Stifel. And this is from one of their reports that just came out about a week ago, and it's a great chart. Stifel think tank group, I think it was December 5th. And look at the jobs, the U.S. jobs. These aren't, jobs going to Mexico or Central America. These are U.S. jobs created from reshoring, right? Reshoring, why? Well, we realize how desperate we were for product when the only product was potentially sourced in China during a pandemic. We also realize that there are global power issues at play here as well. We've got to make sure, as a global economy, that we're not entirely dependent on potential adversary. Huge jobs created, and that is the data behind. Now, we talk a lot about Mexico, but Mexico can't be ignored. This also, sorry folks, this also, my bad, this also came from that same think tank, and this is Stifel data as well. And I will correct this in this in the webinar that the PowerPoint that we send out. I'll make sure that the source is there. But take a look here all the way at the end. In 2023 is the first time here, Mexican imports, they're continuing to rise. But look at what happened. They broke through China levels. So a big deal, real big deal. I mean, obviously they broke through earlier once during the very early days of COVID because everything shut down. But those are big trends. Those are trends that we need to be thinking about, right? So the trend of reshoring and reshoring bringing jobs back to the U.S. and the trend of nearshoring, less reliance on partners that are further away and or potential adversaries. Both of those things begin to strain capacity of trucks and rail. This is Morgan Stanley's takeaway. Now, this is Morgan Stanley's December 5th data, and I just copied and pasted it because it's really important to see. This is more tea leaves screaming at us. And I'm just going to advance the slide here just a little bit to circle and emphasize. Demand component of their index increased. The supply component decreased. Reefer index underperformed, meaning it's a little bit softer than what they expected, and flatbed overperformed, meaning a little stronger than they expected. So these are again, tea leaves. The data is telling us something. Right? Everywhere we look, the data is telling us something. So we'll talk about the supply of truck drivers and carriers. As you know, we have always followed that. That is one of our regular pieces of data. Driver and trucking company counts are down about 15% each. And that is from a peak in May of 2022. And again, look at the supply chain, back to the supply chain stressor. about May of 2022. That's when things started to kind of come down. That's if you look at the chart, and I don't have a chart for the drivers today, but if you look at the chart for the number of drivers, that's when the reduction began to come down. 500,000 drivers are no longer in the industry who were participating in 2021 and 2022, or about 15%. So now you could say, oh, a lot of those are small carriers. Yeah, they are. But the small carriers and drivers overall are much greater represented in the smallest of fleets and medium-sized fleets than they are in the largest of fleets. That is a really important point. So important that I will stress it in a couple different ways. So, but even with that loss of 500,000 drivers, we still have more drivers than we did in 2019. So every year that we've been tracking, there has been an increase in drivers. Of course, not this year, but if you take out the surge from the messed up supply chain, we continue to add drivers. Again, more today in 2023 after calming down than we did in 2019. All right, move on. These dramatic discounts or reductions, excuse me, in driver counts, in carrier counts, and also the strength of the U.S. economy should not be underestimated. The globe wishes they had an economy like us. Every country in the world wishes they had an economy like us. We are still at near full employment, and despite the fact that we've got inflation, which is leveling, that data just came out 2 days ago. We are still buying, and we are still spending money, and we are still at a high rate of employment. So Wall Street is very bullish right now on transportation stocks, because of, I think, a lot of what we're seeing here, a lot of what we're feeling. It's a clear warning sign, though, to shippers. A lot of folks went into this year with bids that like, hey, let's get back a lot of what we gave up from a budget standpoint, and let's go asset based. That's the other point here. Let's go big asset based, because hey, the carriers don't change their rates when things get tough, and that may be true. But when carriers, like in this last go around, reject loads at a rate of 25 to 30% for extended months at a time, they may not have changed their rate, but they're not living up to their commitment to you. They're spreading their assets out to experience some of the windfall of the spot market. So this is a flawed strategy. We'll talk about it in just a second. There were other massive shocks. Look back at 2023. Yellow has been around longer than most of us have been alive, and they collapsed this year. I think a lot of folks were expecting them to collapse for maybe most of the last 10 years, but they finally did this year. 30,000 people out of work, and that took a piece. Folks would say, okay, analysts would say, okay, well, that's probably not going to make a difference. There's capacity, yeah, but I think it did make a difference, and I think it was going to make a difference, and in the end, they did. Oh, hello, look at that. Convoy, a Jeff Bezos, a Bill Gates startup. October, they shut down. They were expected to be a multi-billion-dollar startup in the space, and in my estimation, they were trying to solve problems that weren't problems, and that's never a good start. That's my professional opinion. And then a couple bankruptcy, major bankruptcy notices that came out as well. So it was a challenging year. Here's top issues of trucking as reported by ATRI, American Transportation Research Institute, and Trucking Dive. And you can find more on this at truckingdive.com here. But I circled that bottom because zero emission vehicle, sustainability, ESG, these are issues that now that the global supply chain has mellowed out are top of mind. And for the first time in history, zero emission vehicles are in the top 10 issues in trucking, right? Folks, the interesting, But the challenge is going to be, and we are receiving it's RFP season, as many of you know, RFQ, and many folks are asking us, hey, what are you doing about sustainability? Fortunately, Tucker, we've got a great story to tell about sustainability, and we can help folks bring their scope 3 emissions down to a 0 if they care to. But we're also involved in SmartWay, and we're watching the technology very closely. But the technology alone is not going to help us reach our ESG goals, our sustainability goals. There's a lot more that you're going to have to employ. I'm happy to talk about that offline. So in any sport, my prediction for and my emphasis for 2024 has to be seek balance. And if you've ever played a sport, whether it's field hockey or lacrosse, baseball, football, basketball, any of the above, you always start in a ready position. Martial arts, there's always a ready position, right? And that ready position has you balanced and has you ready to act, to anticipate. And this is no different than sport. You've got to be balanced. I've said for a long time, the days of my deciding I need a certain number of asset base and certain number of non-asset base, or I'm going to use my asset base for backup, those days are and should be gone. You've got to be agnostic. You've got to be agnostic. What you've got to focus on is price and performance. And those companies, not asset-based, non-asset-based, or whomever, those companies that perform need to be the ones that you utilize. Now, you know, folks will say, well, yeah, brokers, they use owner-operators. Well, maybe you're using the wrong broker if you're only getting owner-operators. That's not capacity. I mean, it is, but it's not the capacity that maybe you're looking for. You're looking for steady, reliable companies that get to learn your operation, get to. So I strongly suggest, and I know for a fact, because we operate this way with numerous customers successfully, it always depends on who you're dealing with. There's a lot of carriers we won't touch with a 10-foot pole just because they don't see the world the same way we do, right? So I think if you're reflecting back to a shipper, you just have to know who your partners are, know how they operate, but you've got to have that balance. And why is that so important? Because carriers, you know, can commit to certain volumes, but we know for fact that many carriers begin when capacity begins tightening. Many carriers begin allocating some of their capacity to that spot market because it's just too much money to pass up. So we know that tender rejections go up. So how do we mitigate that? And that, to me, is and always has been balance, and evaluating on performance, not who has the assets or whomever. We all bringing assets to the party. It's the quality of service in the end that has to be the determining factor. So after the devastation, one of the things Alan Greenspan, one of the former Fed bankers, was famous for saying, among many other things, was, and I just forgot, the markets will always overreact, and I think that's irrational exuberance. And that's what happened when 500,000 drivers entered the marketplace in 2021. It was irrational exuberance. They saw a lot of and we overcompensated. We were paying to try to get that freight moved, and the day of reckoning came when the supply chain settled out. We all found new partners or settled down with the partners that we already had and kind of calmed them down, and we started moving the freight again. So what the problem is, every time we try to ride a wave, the tide goes out and we hit the sand, and I think that's what happened. Now, that's what happened for carriers and brokers this year. What I'm concerned with for shippers and what shippers need to be thinking about is crashing the other way, being too reliant on what has been the case for 2023, abundant capacity. I can tell you what we're seeing in the marketplace, and again, we are the first feelers of what's happening. Carriers are being far more selective in terms of the lanes they're taking. far more selective. Drivers don't want to go to certain places anymore. That was not the case earlier this year when freight was hard to come by. It ain't that way anymore. We're seeing that change. So again, a lot about reading the tea leaves, a lot about learning from history, and always, always about balance. I will say the sustainability is going to be an issue. I said it before, the trucks are not ready for it. There's going to be, Southern California is going to get some mandates out there. We can talk a lot about our next presentation, and we'll get you the dates shortly, is going to be on sustainability and what does it practically look like? What can we practically plan on over the next few years for sustainability? So that with that, I am done talking and happy to answer any questions. You can use the chat or the Q&A session to issue your questions. Thanks, everybody. And if I don't get a chance to say it, happy holidays for the rest of this year. Look forward to serving you and thank you, customers and carriers, for the business and the support. Friends, thanks for being here. Any questions? I'll wait one more minute. There we go. Okay. First question, what are my thoughts on how peak season played out? And Jeff Berman answering this question. Jeff, my thoughts. We were fortunate. Our company was fortunate. We recovered a lot of our pain and loss late in the year. But I don't know that it had a lot to do with peak season. I think peak season occurred. I think there was, but again, I think there just came from a lot of different pressures, right? The reduction of the drivers, reduction of the carriers, increase in the normalization or averaging of the supply chain, the loss of Yellow, the reshoring, all these things I think contribute just kind of gradually a little bit, and kind of helped along. I'm interested to see what a lot of the larger publicly traded companies like experienced, during peak and compare and contrast. Next question, how do you see LTL capacity trending in 2024 with Yellow closure? I will say this, that we do a lot of LTL, but we're not an LTL expert. I do think I think this. I said this during the comments, that a lot of analysts, when they predicted what would happen in the marketplace, they said, well, there's a lot of capacity left in the marketplace, and I think that true. I think there was a lot of theoretical capacity left in the marketplace if you compare what was being moved last year and the year before with what was being moved today. But I think a lot of companies made moves from a capacity standpoint, from an employee standpoint, to reduce workforce. So it wasn't just a flick of the wrist, a snap of the fingers to recover that. But I like LTL's chances a lot. That hiring drivers, you have a lot of drivers from Yellow that have been hired and can be hired. And again, you have 500,000 drivers who just left the industry who might be able to be convinced to work locally. So really hard for me to, because I'm far more of a truckload animal than an LTL expert, despite the fact that we move quite a bit of LTL. Next question, Jeff, do you think a better trucking environment would be the first half or the second half of 2024? Good question. I think it's going to be a gradual thing. Again, I think a lot's going to have to do with our shippers going to try to be balanced during RFQ season. RFQ again, last RFQ season, shippers went for broke, and many. There have been a lot of stories and a lot of experience showing that ended up in some service failures and higher OTIF fees and compliance fees and poor performance. So again, when you make massive changes to your structure, you expect massive changes that are probably negative. You just can't make those big changes like that without. So I think it's a lot is going to have to do with how measured and deliberate shippers are with their procurement strategy. But I do think that 2024 is going to be a far better year than 2023. I mean, how could it not? What are you seeing capacity? Where are you seeing capacity come out of the market? Seems a lot smaller truckers have outlasted expectations. Has that changed over the past few weeks? Um, I I'll say this about smaller carriers. Smaller carriers are slightly better capitalized than they ever have been. They're more nimble than they ever have been. And again, when I was growing up in this business and then and working here in the late '80s in college and early in 1990 in college, I remember getting on the phone, and even in the first couple of days of first couple of years working here, I remember being able to sell a load from the East Coast to, from say New Jersey to Chicago. You could sell it for the same low price, all in, every day of the week and Sunday. And nobody knew any different, right? But today, with the technology that's available, I've said this a lot of times before, drivers and carriers can make business decisions that they were never able to make before, right? So they can say, okay, I remember relay this story. Scott Moskrip, the founder of Truckstop.com, visionary for the owner operator, and really, I think, a champion for the owner operator. I gave tools to the owner operators, and what he told me at a dinner a few years ago stuck with me. That owner operators and small carriers use these load boards almost exclusively, sometimes for their. I think that's dangerous, but the main point is they use these loads not to find a load to get back somewhere, but to find the next load. So in theory, they could just continue doing polygons all over the country, or circles, or zigzag all over based on what they can earn. That's an entirely different marketplace than what we grew up in, and it's really important to know that the owner operators have that. Also, owner operators can team up with the large carriers during, and they always do team up with the large carriers during slow seasons like 2023. And then as soon as they start to see, hey, I can make money, they leave those big carriers. That hurts the big carriers just at the time when freight starts to pick up, and they're back in action doing their thing on the load boards. Any material improvement in inventory drawdowns? I didn't get into that, Jeff, and I would say that Stifel's got some great info on that, and I don't have that info to share right now. Appears inventory has been drawn down. How it will affect trucking and warehousing? Yeah, again, Bruce, good question. Always when inventories are drawn down, unless of course there's some contributing factor, always when inventories, they need to be brought back up, and again, that's another pull on the capacity strings. Put another way, is 2024 more about reattaining equilibrium or actually seeing a shortage of capacity, perhaps in second half? I do think, Tom, to answer your question, I think we're going to be dealing with, if we're only back to just slightly more than 2019 levels, there's more freight today. And I think that we overcompensated. I think we overreacted. And I think that, again, because those bids in the beginning of the season were so aggressive and so price driven and kind of blind to most other things, most other values that normally matter. And again, I understand they were just trying to get everything back in one fell swoop. I think that we're going to have a bump, and I do think capacity is going to be tight at some point this year. How tight? I just can't predict that. With some big carrier companies filing for bankruptcy, how do you think this will affect freight marketplace in 2024? Yeah, I mean, it's part of that. It's part of that background story of the 15% reduction in overall. It's the same. I think it's the same sentiment. We just have another minute here before we've got to break. Balance is so important. Equilibrium would be great, but honestly, not seeing any leading indicators pointing toward it, even the back half of 2024. Do you agree? Something demonstrable going to happen for us to get? Yeah, Mark, a good question. When things are in an equilibrium, a GDP growth of like 2.5% or higher in a quarter makes you feel the stress, makes you feel the strain. And what I'm telling you now is all of my capacity specialists are saying it's harder to cover loads. It's harder to get carriers interested in lanes. right? That's not been the case for over a year now, a year and a half. We're starting to see that now. So those are the first things that we look for and think about. And you know, and their carriers being very selective in terms of what they want. That's different. That's a different feeling. So when things are balanced, and we're not sure that they're balanced, they might be imbalanced, right? You saw that global supply chain stressor, that is coming back up. So again, when we overreacted in abundance, you know, when we needed trucking, there were way more trucks than we really needed. If you looked at the freight that moved, the tonnage that moved during that time, we didn't need all those drivers. It was the way we were buying. It was the way we were structured to buy that caused us to have all those drivers. So I think that I don't see like a major regulatory impact. I don't see, God forbid, a new war breaking out, right? That would or hopefully never again a pandemic like we just went through. But those are the things that would just kind of blow all expectations out of the water. But when you're balanced, it doesn't take much, and we just had like a 4% GDP growth, right? 4 is a lot for the U.S. 4 is huge for the U.S. So you've got to watch those things. So those are the kinds of things that are going to mess up budgets. Those are the kind of things that are going to mess up your performance. Those are the kind of things that are going to get the large asset-based carriers interested in saying, you know what, let's kind of quietly put 5 or 10% of our fleet out in the spot market, right? Because that's what they do. Last question. Balance is key, but now with more TMS for shippers, how do you overcome, I don't want to add any more brokers and I want more asset-based carriers? I think that's what I've been saying all along. These TMS systems, they are, I think, contributing actually to the issue. And I think the strategy in utilizing TMS is contributing to the issue. And the idea that asset-based has got to be the way to go is contributing to the issue. It's everyone uses the same large carriers when you put them in a TMS, and the very first carriers to begin disappearing are those very large carriers, and they disappear to their biggest customers who demand that they show up, and B, they allocate some portion of their freight to the spot market. And even if it's not to the spot market, they're allocating certain of that volume to their biggest customers at a higher rate than what you're paying. So you have to recognize that is verbatim what happens, you know, in the marketplace. Is every carrier the same? No, clearly. But that is what happens. And it happens over and over and over and over and over again in every changing market. So that's my 2 cents on that. And again, thank you guys. We're 4 or 5 minutes over. Apologize, but there were a lot of good questions. Thank you so much. And we will correct these slides, make sure we get the sources on a slide there, and get this out to you. Thank you so much, and Happy New Year and happy holidays to everyone. Take care.